The FTDs within AMC are exploding higher here today. We just got new data that shows the FTDs that we've seen the last week and the week before that are nothing compared to the lineup for the next 2 weeks. And we have not seen a spike in consistent FTDs like this one, well, ever with AMC. So let's get into that information. On top of that, I do want to share this article with you from, again, The Street. We highly do respect The Street for taking a neutral view on some of the largest events that take place within AMC. Acknowledging the good and the bad is often the best way, always, I would say, actually, not often, always the best way to look at things. It says it's a trap. Why you shouldn't bet against the price difference in AMC stock and APE shares. And if you guys are unaware of kind of what hedge funds have been doing as far as trading, they're shorting AMC, going long on APE because they think AMC is just going to fall to APE share price. Might not be a good strategy. And I think it's clear to see, at least today, not a good strategy. So we're going to get into that. We are going to look at the charts here a little bit in this video and go over the Ortex data if you missed the last update. So let's get into all of this key information. Hit that like button and subscribe to the channel if you have not already, because it is free 99 and it helps get us closer to that end goal of the short squeeze. At least in my personal opinion. That's not a fact, but I do think so. And I am not a financial advisor. Let me preference this video with that one. These are my opinions and my views only, brought to you guys by public information. This is all public information. You guys can all look this up. Ortex is the only paid thing that will be in this video. So let's get into this information. So first things first, I don't want to lead you guys on. I do want to go over the failure to deliver numbers that we are seeing. And like I said, you have not seen consistent failure to deliver numbers like this, well, ever in AMC's history, at least since, 2020, right before the short squeezes happened. You've never seen a consistent amount of FTDs like this one, not even before the January rally. Yeah, sure, there was that one big spike that we seen right during the rally, but before that, you didn't really see much. June was actually interesting because this was the previous period in which you've seen the most consistent FTDs leading into a rally, and you guys can kind of see the slow and steady, well, gradual, I should say, increase in the FTDs, and these are these white bars right here. Well, look at where we are currently at, and I might have to scroll this up so you guys can see. This was the June rally. This is where we are currently at. So let's take a look at the numbers that we are getting reported here today. So let's go ahead and actually refresh this, and let's see. So today is February 15th. Okay, so that means nothing in theory had to be closed out today. For tomorrow, nothing as well. That is going to be Thursday. But on Friday, you are going to see about 2.5 million FTDs that will need to be bought back. Now, this says on. Oh, I'm so stupid. I'm so stupid. Sorry, guys. I'm a retard. For February 15th. That is today. 1.3 million FTDs that need to be bought back. When I was saying that, I'm like, this don't sound right. I was just looking at this a couple minutes ago. February 15th, that is today. 1.3 million shares that need to be bought back. For tomorrow, for Thursday, 1.5 million shares. For Friday, 2 million shares. Then you kickstart that to February 21st. I believe that is because we don't have trading on Monday. So let's go ahead and confirm. Yes, that is on Tuesday. On Tuesday, next Tuesday, 2.5 million shares. On Wednesday, 1.8 million shares. On Thursday, 1.5 million shares. And on Friday, 1.3 million shares. And then that following week is where things really start to kick into gear. And hey, that's going to be right around the time AMC is also reporting earnings. So that following Monday, February, it's going to be February 27th, 2.1 million shares. February 28th, 2 million shares. March 1st, 3.2 million shares. March 2nd, 3 million shares. And March 3rd, about 2.9 million shares that will need to be bought back. So you're seeing a drastic increase in these failure to deliver numbers, and I think it's probably due to what we've seen announced with AMC, this whole arbitrage strategy people are trying to employ. They're not, getting ahead of this. They're letting these failure to delivers really drag out. So I do think these are going to have a bigger impact than not over the next couple of weeks, as we do especially get closer to earnings, because they will need to be bought back. You can only kick the can down the road for so long when push does come to shove. So you are seeing the failure to deliver numbers dramatically going higher, like dramatically going higher. So there is that. If we take a look at what has happened on the day here today, take a look at the Ortex data. Like I said, if you guys have not watched the last video, the live short interest of free flow is 23.34%, up 0.25% on the day. 120.5 million shares that are currently sold short. Cost of our average of 454%, cost of our max of 755.5%, and cost of our minimum of 1%. Interactive Brokers still does not have live cost to borrow numbers for us, but considering what these cost of borrow average and cost of borrow max numbers are, I'm sure it's roughly in between 450 and 700 across the board at different brokerages. So that indeed is helping to fuel some of this rally. AMC is up about 12% here on the day. So that's definitely a positive thing. Now, even on a technical basis, things are looking a lot better also, and we'll look at that here in just a second. But I do want to take a look at this article. It's a trap: why you shouldn't bet against the price differences in AMC stock and APE shares. Despite the price differences between AMC common and preferred shares, using an arbitrage trading strategy could be too risky. Here is why. AMC preferred equity APE units are currently trading for a few dollars lower than AMC Entertainment's common stock. Many traders, including Jim Chanos, are betting that AMC shares will plunge to meet the value of the APE units. It is possible that APE will rise to match the price of AMC stock, rather than AMC falling to match APE units. And I think that's obviously the most logical outcome here, that APE is just going to rise to match AMC. And then at that point, everyone that has been employing this strategy is going to be so offsides and so wrong here that it's going to be terrible. It's going to be terrible. You're going to see shorts covering like nobody's business when that happens. So this part is basically going over what the actual strategy is. Like I said, it is buying APE. It is shorting AMC. Simple as that, because AMC should go down and APE should remain constant, right? That's at least the theory behind the trade. So you'd make money shorting AMC, you'd stay neutral, maybe make a little bit buying APE, and that is the strategy. This says why AMC arbitrage strategy is a bad idea. The APE / AMC arbitrage trade isn't as simple as it looks. That's largely because AMC is a meme stock that doesn't behave as it should. The high volatility levels in the stock cause it to trade with zero correlation to the theater's chain's business fundamentals, and that keeps the stock trading in a dissimilar pattern for the APE units. In addition, betting against AMC shares and going long APE has been complicated by high borrow fees for traders who want to open short positions in AMC. Jones trading arbitrage expert Cabot Henderson said that if AMC wasn't so unpredictable, shorting the stock and going long APE would be a guaranteed successful trade. According to the strategist, the risk of a short squeeze makes the arbitrage trade in AMC extremely unpredictable. Quote, the real question for ARBs is about how to hedge these positions given the potential for a massive short squeeze. What to do instead? There's no logical reason why APE units are lagging behind AMC stock. Since the APE units were created in August of 2022, they may have not even come close to matching the share price of AMC common shares. The most natural thing would be for the prices of both equities to balance out sooner or later. But because meme stocks defy market logic, shorting AMC can be a very risky trade. Traders who wish to bet against the theater chain shares must pay borrow fees over 160%, which is very high. If AMC stock experiences any sharp upward movements in price, as we've seen with short squeezes, short sellers will be forced to cover their margins and lose money on these very high fees. In theory, the safer strategy is to bet that apes will rise in price to match the common shares rather than the opposite. Okay, someone finally gets it. Investors can do that by skipping a short position in AMC and just going long ape. Disclaimer, this is not financial advice. So, long story short, even if you don't forecast any more upside for AMC, there's going to be upside for APE. Now, if AMC continues to go higher, like we are seeing, like I think it is very logical that it will do, well, you're going to start to squeeze shorts out of their short positions in a very rapid fashion. If we take a look at AMC, you are above $5 per share. All I wanted was to get above $4.50, like $4.50. That was it. I would have been cool with that to close out the week, get above there. You're neutral, right? You're breaking out above your 5-day moving average. That is showing you this could be a reversal to trend. You have not broken out from being down under the 5-day moving average by such a big degree. I mean, look at the gap between this purple line and these candles right here. Pretty big divergence. You have not seen a divergence like that one since really before you hit maybe back here, I would say is a good example. 1, 2, 3, 4, 5, 6. Yeah, 6, 7 days you were under this, and then you did hit the low, and then you bounce from that, right? And you bounce very aggressively with like 220% back-to-back days. That looks to be what is currently going on. Now, you are heading into earnings, and I think there's going to be some big events announced, and I think people are going to be very excited with AMC and the business fundamentals, right? Because, yeah, this and that can cause the shorts to cover, can cause a short squeeze. Yeah, sure, that's the case, whatever. Different things can cause that. But ultimately, the biggest thing that would cause a short squeeze is the fundamentals improving, is AMC getting their hands on some capital, paying down their debt, their theaters becoming more efficient and more profitable. That's ultimately what I want to see, right? All the other stuff, that's just an added bonus. If the fundamentals get better, then that literally takes away the whole entire short thesis. That's it. Takes it all away. Null and void, guys. So that is pretty much going to be it for this video. I did think we covered everything we talked about in the intro. Just to reiterate, there has been earnings from Roku, from Twilio, from a couple other companies here in after hours. Some of them have done well, some of them not so well. And tomorrow you're going to get PPI as well, and that is going to be a big catalyst for this market, guys. So that is going to be it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. If you have not already, hit that like button and subscribe to the channel like I just said. If you guys also want to come trade with me live in real time as well, link down below in the description of this video. And shout out to you guys that are in that trading community that watch these videos until the very end. Yesterday we did place a put trade on Devon Energy to play earnings, $50 into $350 a contract, baby. About $2,000 in profits. That covers that trading program's cost for probably years. So there is that one. And that is it. You guys, most importantly, enjoy the rest of your day, and I'll see you in the next one.